11 money and debt traps that will take your money to the grave. You know that sinking feeling you get when you realize you doesn't have enough money to cover your expenses. That's a warning sign that you are in trouble. Financial trouble is all too common, and it can quickly lead to debt traps that are difficult to escape. In this article, we'll take a look at 11 of the most common debt traps and how to avoid them. We'll also provide some tips for getting back on track if you're already fallen into one of these traps. So watch the video and learn how to protect yourself from all these deadly money traps. Before starting the video, please subscribe to my channel Financial Freedom and turn on the notification so you don't miss any future video. Let's get started. Number 1. Credit card traps. When it comes to your finances, it's important to stay vigilant against any and all traps. One of the most insidious traps, credit card traps. These are traps in which you get ensnared by using your credit card for expenses that you can't afford. Maybe you use your card to buy things you don't need, or maybe you use it to cover debts you can't pay off right away. Either way, you're digging yourself into a hole that's going to be tough to get out of. The best way to avoid credit card traps is to be mindful of how much you're spending and only use your card for expenses that you can actually afford. Remember, it's always better to pay for things in cash rather than put them on your credit card. That way, you won't fall into the trap of owing more money than you can actually handle. Number 2. Payday Loans. When you're down to your last few bucks and payday is still a week or two away, it can be tough to resist the urge to take out a payday loan, especially when you see those commercials that make it seem like getting a loan is the easy way out. But payday loans are one of the biggest money traps out there. In fact, they're often called the devil's debt. That's because they can quickly spiral out of control, trapping you in the cycle of debt that's nearly impossible to break free from. Before you know it, you're paying hundreds of dollars in interest and fees every month and still can't seem to make a debt in your original loan amount. So resist the temptation and find another way to get through until payday. There are plenty of them out there. Number 3. Rent-to-own agreements. Renting to own a product may seem like a good idea, but it's actually one of the biggest money traps out there. Why? Because you're essentially paying for something you don't own. You're paying a high price for the product, and you don't get it on it until you've paid it off in full plus interest. Not only that, but you're also restricted to using that product only at the store where you bought it. And if you ever decide you don't want it anymore, or you can't afford the payment anymore, you're stuck with it. So before you sign up for a rent-to-own agreement, make sure you fully understand the terms and conditions. You may be better off saving up for the product instead. Number 4. Car title loans. Another common money trap that people often fall into is car title loans. Taking out a car title loan essentially involves you taking out a loan against your car. And if you don't pay the loan back, the lender can take your car. They usually charge high interest rates and fees to keep the loan going. Car title loans are an incredibly dangerous form of borrowing money because they're designed to trap you in a cycle of debt. Once you start taking out these kind of loans, it can be easy to get stuck in a cycle of borrowing more money to pay off your existing loans, leading to even more debt. If you don't want to end up with a pile of debt that follows you for years, it's important to avoid car title loans at all costs. Instead, look for other options, such as credit counseling or loan consolidation, that can help you pay off your debts without putting your vehicle at risk. Number 5. Predatory Mortgages. Do you know what a predatory mortgage is? It's one of the debt traps you need to avoid. These mortgages are typically aimed to borrowers who may not qualify for lower interest loans and often have risky features like balloon payments or adjustable interest rates that can make them more expensive over time. So how can you avoid falling into this trap? Do your research and shop around for the best deal when it comes to your loans. Make sure you understand the fees, interest rates, and repayment terms before signing on the dotted line. And if something doesn't seem right, or if it is too good to be true, run. Don't let anyone take advantage of your hard-earned money. Number 6. Tax Refund Anticipation Loans. Tax refund anticipation loans look like a great option. You get your money right away instead of waiting for your refund. But before you jump in, you should know that tax refund anticipation loans can come with high fees and interest rates. That means you won't get as much of your refund as you expected. These loans are designed to take advantage of those who have already overpaid in taxes, and they don't come cheap. The loan company will typically charge a processing fee, as well as an additional fee for the application and approval process. And don't forget about the interest. It all adds up quickly. When it comes to tax refund anticipation loans, always read the fine print carefully. Make sure you understand exactly how much money you will be paying in order to receive your refund money faster. That way, you can make an educated decision about whether or not it's worth it for you personally. Number 7. Pawn shop loans. Pawn shop loans may seem like a fast, easy answer to your financial woes, but they came with some serious risks. Interest rates on pawn shop loans are notoriously high, typically 20 to 25%, and you have to pay that rate every 2 weeks until you pay off the loan. That's add up to a lot of money over time, and if you can't make the payments, you lose whatever you put up as collateral. On top of that, the process of taking out a pawn shop loan can be complicated and difficult to understand, and there is a chance that the shop won't offer enough money for what you put up as collateral. Furthermore, many states have laws in place which limit how much interest pawn shop can charge, so be sure to check your state regulations before taking out a loan. At the end of the day, it's important to consider other options beside the pawn shop loan, which could offer more favorable terms in terms of interest rates and repayment period. Number 8. Debt consolidation scams. The 8th debt trap to watch out for is debt consolidation scams. That can be especially enticing if you have multiple debts that you want to tackle out at once. But the truth is, many of these so-called agencies are just out to take your money in form of fees or consulting charges without really providing a service or helping you get out of debt in any way. And even worse, they may actually end up taking more money from you than you were originally trying to pay off. In addition, they may try to convince you to transfer your balances onto a high-interest credit card, which can also do more harm than good in the long run. So be sure to do your due diligence when it comes to debt consolidation and always read all the fine print before signing up. It's best not to work with an agency that has high upfront fees, as this is usually a sign that they may not have your best interest at heart. Number 9. Investment scams. Investment scams are unfortunately a common money trap that many people fall for. Some of these scams can be elaborate, but there are certain red flags you can look out for. One common scam is a Ponzi or pyramid scheme. This is where scammers promise investors huge returns on their money. That seems too good to be true. In reality, these scams take advantage of new investors to pay off old investors, with no actual investment taking place at all. Another type of scam is an investing opportunity in a fictitious company, or one that doesn't exist. It's also important to look out for hidden fees and charges when investing, as this could be a red flag that something isn't quite right. If you're not sure about an investment opportunity, do your research to double check the legitimacy of the company before you commit any money. Number 10. Overdraft fees. The 10th money trap to be aware of is overdraft fees. You might think that this only applies to people who are bad with money or those who don't pay attention to their bank accounts. But the truth is, overdraft can happen to anyone. They occur when you spend more than what you have in your account, leading you to incur a hefty fee. Many banks may also charge an additional fee each time the account is overdrawn. Some banks may even allow merchants to authorize a purchase, even if you don't have the funds in your account, leading you to incur more fees for something that you don't even purchase in the first place. So if you want to stay on top of your finances and avoid overdraft fees, make sure you keep a close eye on your bank accounts and transactions. Number 11. Lotteries and Gambling. The last way to lose your money is by engaging in lotteries and gambling. While it may seem like a fun and easy way to make some extra cash, the reality is that most people end up losing more money than they put in. The odds are always stacked against you, so you're much more likely to come out empty-handed than with some extra money in your pocket. And even if you do win on occasion, the amount won is usually not enough to even begin to compensate for the losses incurred. Plus, the urge to keep playing and win more can become addictive and lead to deeper financial trouble over time. So if you want to maximize your chances of having enough money for retirement without falling victim of these traps, then it's best to avoid lotteries and gambling entirely. By avoiding these 11 money and debt traps, you can take control of your finances and secure a better future. Please like and share the video and comment below if you have any queries. Thanks for watching.